Happy Friday, Eric Bible with the Bible team at Neo Home Loans. And it is hard to believe that 3 weeks are just left in 2024. What are you doing to ensure this year ends on a high note? And most importantly, what are you doing to ensure that 2025 is your best year yet? There is still time, despite there only being 3 weeks left in this year. So, with that, we kick off this Friday on a high note. Yes, mortgage interest rates yet again down from last week. We kick off this glorious Friday with the 30-year at 6.84%, which is down from last week, 6.95. And again, any move down is a welcome relief. And with that, let's dive into the happenings of this week, as this week was an incredibly pivotal moment as we lead into the close of the year, but more importantly, the Fed rate decision later this month on December 18th. So we got the all-important jobs report this morning, loan limit increases, and ultimately what you can be doing to distill and bring more value to your clients to ensure that success close to the year and more importantly, the success into 2025. So let's start off. Jobs report. This was one of the most important jobs report we were looking for, arguably of the year, given the fact that the Fed has been incredibly vocal that the labor market is that last thread to continue with rate cuts. And again, that report came in this morning. Markets were expecting 200,000 new jobs created in November and unemployment moving up to 4.2. Well, we did get a miss, and I'll back up. Typically, when we get a miss, not in our favor, where it's hotter than expected, bonds don't like it. But remember, in October, we had a lackluster jobs report. And yes, there's thought around strikes and the hurricanes, but here nor there, we had an incredibly weak October jobs report with 12,000 new jobs created. Well, this month, market was expecting 200, and we got 227,000. But more importantly, unemployment moving from that 4.1% to market expectation of 4.2. So what does this mean? And where, yes, I said earlier, typically when there's a miss not in our favor, rates deteriorate. Well, again, October was that key. We had a very, very lackluster jobs report this morning. Yes, it was a beat, but it wasn't as strong as it could have been. And if we take that 2-month average, we're still in line with a weakening labor market. So really, this important report and why we're seeing a rally in mortgage-backed securities is that the expectations of yet again another Fed rate cut later this month is very, very strong. We'll again continue to monitor this and share that information as it comes forward. But we were saved by the jobs report, and as it sits right now, mortgage rates are liking it. So next, all important loan limits. As we know, this time of year, every year, FHFA, Federal Housing Finance Agency, addresses the conforming loan limit. And by no surprise, we saw an increase. And the official number, national conforming loan limit, $806,500, up from the $766,500 of 2024. What does that mean? Well, as we know, conforming loan limits allow for lower than 20% down. So again, an increase to affordability, with acquisition dollars being less than that important 20% number. Additionally, for San Diego County, given the fact that we are considered a high cost territory, the conforming loan limit went from the $1,602,550 up to $1,077,550. So a nice jump there. But what was very surprising, historically, FHA, which allows that 3.5% down up to that top end range, matches the conforming loan limit. Well, for the first time, it did not. So here in San Diego County, it's $1,602,550. Now, as we've seen, unfortunately, in past, this can create some impact down the road. So what I would challenge you all to do is to get with myself or your trusted mortgage advisor to get a very detailed list as to the different counties and the loan limits throughout. So, value to our clients. How can we bring this information to street to ensure, again, that successful close to the year and, more importantly, a successful jumpstart to 2025? As we know, loan limits are out. affordability is still in question with rates elevated. We can use this information for clients to get a seat at the table. It is becoming clear that interest rates are headed down. Now, I don't know when they will be at the levels we are waiting for, that infamous 5, potentially 4, but we are seeing positive signs. And again, with the increase in loan limits, home prices continuing their run higher, now is the opportunity for clients to take advantage. While everyone else's focus is elsewhere for the holidays, this is the time to strike. If you are running into challenges and need help communicating this message out, know that we're here and would love the opportunity to support. As always, let's make it a fantastic Friday and an even greater weekend. Thank you again.